Good morning. This is Bruce at Fleet Capital Management. It is the 16th of December, 2023, Saturday morning. I want to show you some new items. I'll go as quickly as I can and also talk about the market and what's been happening with our performance. So, as always, the video presentation is intended for educational purposes only. The discussion of any security is not a recommendation to purchase or sell the security. As you know, I'm always available, Bruce at Fleet Capital Management. Our website, fleetcapitalmanagement.com. This top button will put you on my schedule for a video call, which is a great way for us to discuss private matters and take a look at your account. A couple of new things. Most of my portfolios, almost all, have a position of some size in QQQ, which is the NASDAQ 100. The reason I bring this up is this company that created this ETF has come out with a new series. The symbol will be QQQM. The only difference is it has a little lower fee structure inside the ETF. I don't think it's enough for us to just sell the Qs right now and realize that gain and then go into the QQQM. But as I'll show you on the chart, when there does come a time where it looks like we should liquidate the Qs for whatever reason that the market is telling us, when we go back in, we'll use the new series. So I just wanted to give you a heads up on that. We have a new trend candle coloring system. I was using Go No Go for a number of years. I've switched to a company called Lux. I will show you that on a chart and also show you why I made that change. I think it's going to be very good for us. On our stocks, I've shown you a new technology that I'm using called TipRanks to be able to find the best Wall Street analysts, just to be able to see what they're saying because the institutions follow what they're saying. But they also have a performance section that I've been using, and let me show you the benefit of this. First of all, it's showing you that our success rate has been 80%, and that just means 8 out of 10 or 12 out of 15 of our stocks are currently positive. A couple of them are right near flat, so that number can go up. Our average return, all this means is since we went into any stock, our average return when we buy into the stock is 9.6%. The longer we own that can continue to go up, but this is gains, losses, everything. So pretty good rate of return. You can skip all of this and this line. November 1st is really when we started tracking. And what you might want to see is that in November, the S&P, which is right here, was up 9.13%, and our stock portfolio was up 17.3%, which is a pretty substantial betterment in return. So far in December through yesterday, the S&P is up 3.42% and our stock portfolio is up 6.04%. Once again, pretty strong outperformance. It is because of this outperformance without taking, I believe, more risk than the S&P, probably taking less risk than the S&P, that one thing that I may do coming up soon is for Group 1 accounts, I may liquidate our position in SPY or S&P 500 and have that room in the portfolio to add more stocks. It just seems to make sense. If our individual stocks as a group are outperforming the SPY, well, it makes sense for you to be in those. So I'm really close to doing this. I may do that for the SPY for Group 1, and then we'll wait a couple more months and track this, and I'll show you this each month. I may do that for Group 2 as well. So that's just something that is new and coming. Year-end portfolio reviews. I'm about to send out an email either today or tomorrow inviting you to do a year-end portfolio review. Even if we've done a recent Zoom review for whatever reason, I'd still like to do this if you don't mind, just so we can talk about the year and make sure you're positioned properly for your risk tolerance. You know, things change, so I would like to talk. I don't think it will be that long of a review. Lastly, we're hoping to add 1 or 2 new clients into the new year. If you have a friend or an associate or a family member who would appreciate this type of work, you know, I'd love to talk to them just to have a conversation to see if this might be a good fit. Let me, on a global basis, remind you what we have done over the last 2 years at FCM. Number one, we've put in a number of systems to help us avoid a bear market, or at least not participate to the downside in a bear market. We may be able to gain some money in a bear market, but we have a lot of systems in place so that we're not going to ride those markets down ever again. And we've worked very hard on refining our stock picking. And as I've shown you, our stock picking seems to be consistently outperforming the S&P. So if you know of anyone who's looking for that level of performance with lower risk, I'd love to chat with them. Okay, let's go over to our matrix and let me show you a couple of new things. First of all, you can see that we're in the green. This was as of Friday. But this column here that used to be go, no go is now called Lux. And I'll describe that for you in a minute. And I'll also show you on the chart. This is our daily, and then this is our group 2 weekly analysis. We're doing the same thing. We're using the Lux. Their candles are colored in 3 different ways. Green, if you see here, is bullish. Purple means a consolidation or a transition in the stock or the index, and red is bearish. And I'll show you all that. But right now, we're in a complete up situation. The VIX, which I have recently added, which is that fear index, is at 12.32. You've got to understand how low this is. This is incredibly low. And the lower the number, the greater the probability that we continue in a bull market. Now, things can change from day to day, but you can see since I started adding this for your review, this has been wonderful. And also with our rules, because we're very rules-based, if the Lux goes above 20, if it hits 20, this will turn red, and that's a clear indication that we will not be buying new securities and we will tighten our stops. It's just another way. Here's our bear market avoidance indicator that if the 10 went below the 20, we're done. We're not buying stocks and we will tighten stops. So we will avoid any potential bear market. That's how it works, okay? Coming back over here, this is my portfolio of stocks. Don't worry about the dollar number. That's just meaningless. What I do is every time I buy a stock with a 5% position in your account, I put $5,000 into here. And if I do a 3% position, and then I do $3,000. So don't worry about this. It's just a method of weighting our stocks so that we get a real nice representation of how the whole portfolio is doing. Now, in my afternoon emails, if I say to you, our portfolio of stocks have outperformed the S&P, this is Friday. Friday, our portfolio of stocks was up 0.09%, and the S&P, which is over here, was down 0.01. So what that means is, on a whole, if you look down here, here's all of the stocks that I've purchased. It means that as a whole, this whole portfolio has outperformed the S&P 500. Now, price change for Friday, you can see that we had quite a number of stocks that were actually down. Builder was down almost 3.5%. Massey was down 0.5%. PH was down 0.4%, and so on. And we also had some gainers. But what we're tracking is the weighted portfolio of the stocks outperformed the S&P 500. So that's pretty significant. And we haven't done it with a lot of risk. If I come over here to this performance tab, let me see if this is what I want to show you. Yeah, our risk profile is medium. We're not taking a lot of risk to achieve these fabulous rates of return. So I just want to make sure that you understand that. Now, let's take a look at our charts. This is, let me go to the S&P 500. This is the S&P 500 on a daily chart. Let's talk about the candle coloring. The candle coloring, I used to have to go to another screen and show you that go, no go. Now I have it on my primary screen, which is better and more efficient, but I'm using Lux. Lux green candle coloring is a bullish trend. The purple is either consolidation or transition. Here's a transition from green, purple, red. So in an uptrend, we just want to see green and purple. That's all we want to see. We don't want to see any red in there. On a downtrend, we suspect we will see red and purple. And then here's a transition. It went from red to purple back. So my point is purple can be either a transition from a downtrend to an uptrend or an uptrend to a downtrend, and it can also just be some sideways movement. So that's the new candle coloring system that I want to show you. On the S&P 500, we are at the top of the linear regression, which usually means we could see a little bit of weakness, but I'm not sure we will right now because of the seasonality and also because you see this box with the blue and red, it's not on a 45-degree angle pointing up. If it were, and we were outside the top, that makes me believe we're going to see a little bit of a dip to get back inside. But right now, I'm not real worried about that. You can see that the blue, which is the 20-day, is above the gold, which is the 50-day, which is above the 200, which is the red. Perfect. It's exactly what we want to see. I've added this white, which is just an 8-day moving average, I believe. Maybe, let me see if I used 8 or 5. I used a 5-day moving average. So what that's just doing, I use this for trading, not really for trend analysis. So that's what the 5-day moving is for. It just helps me with timing with more precision when we go in or come out of stocks. Okay. So I like what I'm seeing with that on the Qs. Which is the NASDAQ 100. Again, same story. We're up here, but our indicators are showing nothing really out of the ordinary. I'm very happy with them. And just to remind you again, if there comes a time where the indicators say maybe we should take a break from the Qs because things are looking weak, we'll do that, of course, to protect whatever profits we have. And then when we go back in, we'll go into the new series, QQQM, which has a little lower internal fee. One stock I'm not real happy with right now is NetEase. NetEase is a fantastic company. That's fundamental analysis, but technically speaking, I'm not liking what I'm seeing. I have an extremely tight stop. I wouldn't be surprised if we're stopped out of this stock on Monday. We can always go back in, but I just can't let it keep falling. And if I go over to our portfolio analysis, you will see that it is currently our worst performer. We're down 7.41%, which is certainly not terrible. It's still considered a moderate buy. The analysts are still rating it with a strong indication of buy, and also they're saying that it has a 41% upside potential. Now, why would I sell this if this has a 41% upside potential, you may say? That's because we don't know how far it's going to go down before that potential upside, which is they're saying currently is 41%. Let's say this stock, we're down 7.5. Let's say the stock wants to fall another 5 or 6%. Do we really want to sit there and experience that before the upside? No, we don't. So it is possible that we will be stopped out of this, and it is also possible that we'll go right back into it at a later date. But right now, I just can't let a stock keep falling. We've got some really good rates of return, almost 40%, 24%, 22%, 19%, 18%. We've got some great returns. Down here, I just want to make sure we don't let things slip too far. And we've got a couple of stocks that are basically, well, 3 that are basically just flat. We're waiting for those to take off. So that's the story. I hope I've covered everything. If you have any questions, feel free to shoot me an email. And other than that, watch out for that portfolio review email with a link to get onto my calendar. We'll do that, and have a wonderful rest of your weekend, and we will talk soon. Bye-bye.